Time now for the markets with Leighton. And Leighton, you say recent world events have made people a little more nervous about fuel prices in the coming months?
Somewhat, artists. And coming up, we do have an update for you on the crude oil situation in the market segment. Also ahead this week, some analysts believe corn prices are likely to remain volatile. Soybeans have been described as being on a roller coaster this week, while U.S. catfish processing is up, according to a new report. We begin this week in the corn and soybean markets. Both commodities were trading lower Thursday morning as we produce this segment of Farm Week, but that hasn't been the case all week. Extension agricultural economist Dr. Brian Williams joined me for a few minutes Thursday to share some of his thoughts. Brian, let's begin with this month's USDA reports out not too long ago. Now, of course, they somewhat of a surprise, they lowered corn yields. Were you on board with that, or were you thinking they might increase it?
Well, at this time of the year, the corn yields are hard to call. There's a lot of scouts out there right now, and they're seeing some mixed results. States like Illinois and Indiana, things look really good, but then there's states like Iowa where they're seeing a lot of variability, where some areas look really good and other areas look kind of stressed because of the late planting.
Well, the consensus kind of seems to be, if you read a lot of analysis out there, that volatility is here to stay, at least for corn. But yet this week we've seen a little price strengthening or stabilizing. What's going on there?
Well, there were two reports. There was the report on Monday, the supply and demand report on Monday that bumped down production, and that kind of helped boost prices. And then later on there was a second report last week by the FSA on their prevented acres. And they're saying there's a lot less acres out there than what even the World Ag Supply and Demand estimate says.
So they really undershot, if we will, what the government had to say about that.
They did.
All right. Do you think the next couple of months reports could show, decreased acreage? What is your take on that?
Definitely, I think so. Since the FSA report was released after the supply and demand report was, definitely in this next report we're going to expect them to kind of reflect what the FSA had to say.
All right, let's kind of focus in on soybeans here a moment. The government again lowered soybean yields. Do you think that was a legitimate call on their part?
I think so. Again, it comes back to this last spring. We saw a late planting, and there's areas that are showing signs of stress because of that, and weather and other things.
Okay. And domestic consumption, let's kind of recap what the latest report had to say about that.
Yeah, they did lower the domestic consumption, the crush, by about 20 million acres, or 20 million bushels. But I think a lot of that had to do with the reduce in the supply rather than reduction in demand.
The cost of gasoline and diesel is never far from people's minds, especially if they're in agriculture and figuring inputs for the next crop. Recent increases in crude oil can be thought to be associated with unrest in other parts of the Middle East. However, analyst Sue Martin notes there are other factors possibly supporting oil prices as well.
We continue to come back and kind of percolate towards the top side, and I think that the crude oil market is a market that still could go higher. There's objectives of 115 to 120, so the crude oil market is probably one I would not want to be short. When you look at this market, it's the unrest in many parts of the world, and I think that and yet, on the flip side, you're also seeing some improvement in the U.S. economy, thought to be improving economy in China and also in Europe. That, too, could be underpinning this market and kind of pushing us a little bit higher.
Cotton is the subject for our trivia quiz this week, and here's the question for you. What percentage of a dollar bill is composed of cotton fiber? Is the answer 25%, 49%, 75%, or 100%? I'll tell you that answer at the end of the markets. Farmweek continues with a check of the latest snapshot of the U.S. farm-raised catfish industry. This reflects what was happening during July. Last month, producers received a pond bank price of 98 cents per pound. That is 14 cents per pound more than was paid in July 2012. Farm sales totaled just a touch over 28 million pounds round weight. That's an increase of 13% from 1 year ago. Meanwhile, processor sales were 13.5 million pounds. a less than 2% increase from July 2012. This week, lower cash hog values have turned into somewhat of a headwind for the pork sector. However, analyst Darren Newsom still thinks continuing good demand for pork will be able to turn Wednesday's losses on the market into only a temporary setback. He believes that the hog market is underpinned by the right kind of strength.
You know, the hogs look like they just want to keep moving higher. They're well supported by the cash market. We've got good demand for the hog, for pork. So right now it looks like, you know, maybe we want to test some of the highs that we saw earlier this year. The October's got a nice base building under it. You know, it's not just one of these spike rallies that fall apart. You know, it's going up and it's finding new buying and it's continuing to push higher. So, you know, it looks to me like it's a market that's gaining strength. It's gaining the right kind of strength. So in other words, coming from the cash and commercial side. I really don't see this thing breaking. Of course, hogs can be hogs.
Before our feature story, let's check the trivia answer for you. The correct choice is C. 75% of a dollar bill or any paper currency in the U.S. is cotton fiber. The other 25% is linen.